Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. First off, hope everybody had a wonderful weekend. I hope you enjoyed the 3 day the 3 day little mini break we had. Had a great holiday if you traveled. Just a fantastic trip, and just enjoyed the time with family and friends. Right. So we are looking forward to what should be these next couple weeks will be the busiest stretch of the quarter, and just a ton of names reporting in a very like narrow window here, and it just leads to some crazy few days of action. So ton to look forward to. Uh, Today, what I want to talk about is something I've gone over in the past. I haven't really talked about it recently though, so I felt like it was a good time just to bring it up again. And what I want to highlight is what I call um, like the third, fourth, fifth. Basically, any report after the first and second in a very similar group within a sector, or even like a very similar sector, subsector, whatever. It's basically, like the third, fourth, fifth, anything after the second of very similar companies. All right. So you're probably like, what the heck does that mean? So this is a good illustration of what I mean. So for those that are not familiar, MSM is an industrial parts supplier. The three stocks I'm going to talk about are all industrial parts suppliers. They're not um, exactly the same, but there is a lot of overlap, a lot of similarities, and they tend to react to each other's numbers uh, quite sharply. All right, so these are industrial parts suppliers, so a little bit of like a group within the industrial sector. Right, so MSM. This was the first of the group to report. So MSM misses and guides lower, right? So being the first, those are typically the ones I'm most interested in. The reason why is the first report. I obviously don't always play them, but they're the ones I'm most interested in. Not only because there's more surprise element to it, right? Like people don't really know what to expect because there hasn't been a report in that area yet, right? They're also tend to be the most volatile too because of that uncertainty, right? So nobody knows what the numbers are, and the stocks can tend to be a little bit more volatile because of that uncertainty. So MSM was the first one to report, right? And they miss and guide lower. So after that, you have Fastenal that followed it up either a day later or 2 days later, right? So then they beat. They don't guide, but they beat and had solid numbers, and that jumps. So you have MSM goes first, misses and guide lowers and drops here. Fastenal beats and gaps up and grinds higher, right? So now you have one saying one thing, the other saying another thing, and then this morning you have Grainger, right? So GWW. So now you have mixed signals, mixed performances, and you don't really know what to expect, right? So that's why I say, once you get to the third, fourth, fifth name within like a certain group, it can be a lot more challenging because either expectations are already set, or there's so many mixed signals you don't know what to expect, right? So say for instance, MSM had beat, Fastenal had beat, and Grainger had run into their number, then everybody would be expecting to beat, and there's really no surprise element there, right? In this case, it was MSM missed, Fastenal beat, so you didn't really know what to expect. I mean, there was mixed signals all over the place. Now, it's one thing if the options were, maybe offering like a significant discount, right? Or they were trading at like a significant, significantly less than what it's moved in the past. But in this case, when I was looking at the options coming to the week, Ranger was priced in about 21 points. So yes, it had moved more than that a couple times, but it was more or less in line with like the average of like the moves which it had over like the last 3 quarters or so, right? So there has been some bigger moves. There's also been some smaller moves, like back in January. So a little bit more mixed, right? So some big moves, some smaller moves. Take the average of it in the low 20s. So kind of in line. So the options weren't really, they weren't pricing in the fact that MSM had already reported and Fastenal already reported. So at 21 points, like what do you, it's kind of like a hard call, right? Because MSM said one thing, FAST said another thing, and then you're going to have to figure out, well, is there enough uncertainty left remaining here for this to exceed the price to move? And I felt like there wasn't. And as it turns out, the stock hasn't moved that far, right? It's moved about 15 points. So that's kind of what I meant. Like the third, fourth, fifth. You'll see this sometimes in the airlines, right? When you get like Delta and American report, then it can be a little bit tougher to play the UALs and the JetBlue and the Southwest because a lot of what has already come out. It removes the uncertainty for those names, right? I mean, so you'll see it in a lot of different pockets here and there, and that's why I try to avoid those reports that are a little bit later, that have already that come after like a bunch of names, very similar names have already reported, just because if the options don't really reflect the fact that a lot of uncertainty has already been removed, then it can really make it tough because there just isn't that very volatile element that could really create like a monster move like you get in like the first report or even like the second report, right? Expectations are set. A lot of people know what type of numbers they're going to be looking for, and then a lot of times also you'll see like the stocks move in anticipation of that. So I wanted to go over this because as we start to get into earnings and companies will start reporting, you're going to see that there's going to be a lot of overlap. So with like the industrials, right? Like if you get like multiple machinery names or multiple aerospace names, right? With the banks, you saw with the banks, right? When multiple banks reported, it was like expectations started to get set, and then like it was tough to get paid on some of those later reports because people were already anticipating certain things, right? So it's just something to be aware of because when you're laying out money for options, you want to put yourself in the best position to really like beat those priced in moves, right? And once you get into like the third, fourth, fifth, sixth, seventh, whatever it is, then a lot of the uncertainty has been removed, and it can be a lot more challenging to really find setups that exceed those priced in moves. So again, I wanted to highlight it now. I've talked about this in the past. I hadn't talked about it recently, so I thought it was a good time to talk, just go over it, just because as earnings season wears on here and we get into it, you're going to start to see this repetition of very similar names reported. You're probably wondering, like, well, Honeywell moved 8 points last week. Why isn't UTX moving the same amount? Well, it's because everybody's expectations have already started to ramp up in anticipation of that. All right. So if you have any questions about this, maybe a specific setup that you've seen and you wanted to talk about that, I'd love to hear from you. So reach out. If you hadn't checked out the earnings on the radar video from this past Thursday, so obviously Friday the markets were closed, so I did it on Thursday. So definitely go back and check that out because I went over a lot of the names I'll be looking at this week. Obviously, it's a packed week of big names, so I went over some of the ones I'll be watching, what the price to moves are, what the setups look like, so on and so forth. So definitely go back and check that out. All right. So have a great night. Best of luck with your play anything, and I'll talk to you guys all tomorrow.